Before we get started with all the topics and with all the things that do, and there's a lot of interesting stuff currently going on, maybe give the viewers and the listeners some overview of like who you are and especially why you're excited about Bitcoin.
Absolutely. My name's Zack Shapiro. I wear two hats in the Bitcoin space. One is that I run a corporate law firm. I represent Bitcoin and crypto startups. I help people raise money, navigate regulatory challenges, and generally sort of grow their businesses sort of from a legal perspective. I'm also the head of policy at the Bitcoin Policy Institute, which is a DC-based think tank focused on Bitcoin. Our mission at BPI is to educate policymakers about Bitcoin and what we think good policy looks like with regard to Bitcoin. And my specific job there as head of policy is to help decide what policy areas to focus on and what our specific position should be in each of those areas.
Interesting. I've seen an interview with, I think, Frank Korva and you around the Samurai wallet thing, and I think they have recently changed their plea from like not guilty to guilty. I haven't really observed it in the detail, of course. And then I actually never covered it on the podcast, so I was like, I want to take a small portion of this podcast to focus on this a little bit. What is, for the people that maybe have never heard about the whole case, what is kind of the main focus of that and what's going on there?
Absolutely. So by way of background, Samurai Wallet was a non-custodial Bitcoin wallet. Non-custodial means that users held their own keys. The wallet and the software did not sort of custody Bitcoin on behalf of users, but it was software that allowed users to generate their own private keys to hold their own Bitcoin. What sort of made Samurai Wallet unique among Bitcoin wallets is that it was a privacy-focused wallet. So it had two features that helped people spend their Bitcoin privately. As probably many of your listeners know, the Bitcoin blockchain itself is pseudonymous, but totally public. So, I don't have to register with my name and ID to get a Bitcoin address. But if someone can associate an address with my identity, you can trace all of my transactions. You could see, how much money I have. You can see who I've done business with. And this can be a problem sort of in day to day. If I'm paid via Bitcoin, I might not want my employer to know my exact net worth and who I've done business with. If I'm, buying the proverbial cup of coffee with Bitcoin, the person who I'm buying coffee from, maybe I don't want them to see every other transaction I've done. And, we're used to sort of some level of financial privacy in the traditional world. If you pay for something with a credit card, the vendor that accepts your credit card doesn't know everything about your financial history. And certainly when you use cash, that's quite a private way of buying things. And so there are two ways that Samurai Wallet helped users protect their privacy and anonymity. One is called a coin join. A coin join is a collaborative transaction where a bunch of people spend the same amount of Bitcoin at the same time as part of the same transaction to help obscure where the funds are going from and to. And so there are different sort of pools within Samurai CoinJoin. Samurai ran a software called a coordinator, which helped people find each other who wanted to sort of make the same amount of Bitcoin anonymous. So let's say I've got my main stack in cold storage, and I want to have 5 million Satoshis, 5% of a Bitcoin available that I can spend in a private way. I would join the 5 million Satoshi Samurai pool along with a bunch of other people who wanted to make 5 million Satoshis worth of Bitcoin anonymous. We would all spend essentially 5 million sats from one address that we own to another address we own, but at the same time. And so now we all end up with these inferences that are harder to make between the send and receive address, even though the Bitcoin was in our possession the whole time. Also, they had this tool called Ricochet, which allowed you to add extra hops. There were exchanges out there that didn't like to deal with people who use privacy technologies like CoinJoins, and so they just wouldn't accept something that had come from a Samurai pool. And so Ricochet allowed you to, for example, send your coins to Coinbase, but add a couple extra sort of unnecessary steps in the way, so it's harder to tell, are you the person who used a CoinJoin or not? And so this service was used by lots of different people. It was one of the biggest CoinJoin services. Now, meanwhile, the Samurai developers had gotten a legal opinion from their lawyer, quite good regulatory lawyer who's been around in the space for a long time, that what they were doing is perfectly legal. There are illicit finance regulations that apply to certain actors in the Bitcoin space. based on whether you accept and transmit other people's money. So the sort of most up-to-date guidance that the government has put out on this was in 2019, called the 2019 FinCEN guidance. And basically it said if you are a non-custodial wallet, that the Bank Secrecy Act, the requirement to KYC AML does not apply to you because essentially you're just putting out software. It's sort of like, Apple is not responsible for people who use MacBooks to commit crimes. Right? A USB cable manufacturer is not responsible for someone who uses their USB cable to commit wire fraud. However, a bank, right, or an ATM company is responsible for KYCing who they do business with because they hold other people's money, and so they're regulated sort of under banking laws. And there was this understanding among crypto lawyers that this sort of custodial versus non-custodial line was sort of the question about whether you were subject to KYC, AML, or subject to the Bank Secrecy Act or not. What happened in the Samurai Wallet case, and in a very similar case with an Ethereum tool called Tornado Cash, is the government arrested the developers and charged them, among other things, for unlicensed money transmission. They said, despite the fact that the way Samurai Wallet worked was non-custodial, they did not accept or transmit anyone's funds. Nevertheless, the government is going to hold them responsible as if they did because they facilitated other people's transmission of funds. And this got my attention because if you sort of really think carefully about the government's argument here, that argument can be applied to almost any real use of Bitcoin. If all you have to do to be responsible for KYC AML is to help other people transmit their funds, well, let's think about who else helps people transmit funds. Anyone who makes a cold wallet, right, or a hardware wallet. They help people generate private keys and spend funds. Anyone who runs a node, if I use a Ledger wallet to store my Bitcoin and I use the Ledger Live software to do transactions, well, Ledger's node is broadcasting my transactions, so they are facilitating my movement of funds. What about Bitcoin miners? Bitcoin miners, their whole thing is they create blocks, they add transactions to the blockchain. They're facilitating the movement of funds. What about the company that makes the plastic that is the casing for a Ledger wallet? Well, they created the device that allowed me to generate, there is basically no end, right? There's no logical endpoint to this argument that the government is making. And so it sets this really dangerous precedent that basically any sovereign use of Bitcoin would be subject to the Bank Secrecy Act. And it really would be sort of a backdoor ban on the use of Bitcoin in America. And so the government sort of proceeded with this theory, and the case was going to proceed to trial. The defendants were, in addition to this money transmission charge, also charged with a conspiracy to commit money laundering. The charge says that they were intentionally helping criminals launder funds. And, no doubt there were some people that were using Samurai Wallet for bad purposes or to hide sort of proceeds from crimes like hacking or other sort of internet-based crimes. And the money laundering charge came with a up to 20-year sentence, which is sort of really hard to face if you're a person and you're going to trial. There's a quite pro-government, sort of hostile to the defense judge in this case. And what happened this week, so we're recording on July 31st, yesterday on July 30th, the defendants both pled guilty to that money transmission charge, as illogical as it is, because they weren't transmitting anyone's money, because the sort of prospect of going to trial on the money laundering charge, where they could have gotten multiple decades in prison, it was just too hard to bear.
So the implications of that, if that would be, so the trial is not over, they're just changing the plea. I'm not.
No, there's no trial. When you plead guilty, you give up your right to a trial, and they are just going to be sentenced to prison.
So now the implications of that is that the same argument could now be used to kind of force services like Bitcoin mining, hardware wallets, the things that you kind of mentioned before, that they also have to do KYC everyone.
That's the worry. But when you really think about it, they can't, right? If you're a Bitcoin miner, right? If you understand sort of how Bitcoin mining works, if you're a mining pool, if you're a hashing company, you actually can't KYC anyone. So it's not just that there's a KYC requirement, it's a ban on mining in the United States if they were to apply it that way. Or, taken to its logical endpoint, it's a ban on self-custody, because it now becomes illegal to provide the software or hardware to allow people to self-custody if you're going to be treated as violating the Bank Secrecy Act by not KYCing people. If you think about, for example, the hardware manufacturers, Ledger, Trezor, Cold Card, Bitbox, you name it. There's not really a way that they have to KYC people. It's just a piece of hardware, right? A kitchen knife can be used for a murder, or it can be used to cut a steak. And normally we don't hold the kitchen knife manufacturer responsible for people who use their knives to commit murder. But that's really what the theory of these prosecutions in Samurai Wallet and Tornado Cash are doing. So that is a really big concern. And the most important way that we have to mitigate that concern is a law called the Clarity Act, which just passed the United States House of Representatives. A similar bill is going to be voted on in the Senate probably sometime this fall. And there is language in that bill in Section 109 of the Clarity Act that would basically prevent the government from doing prosecutions like this in the future and protect software developers and Bitcoin users.
What are other implications of that? Is there something beyond that could come as a bad or as a consequence from that for the Bitcoin or for the Bitcoin ecosystem?
From the precedent set by these prosecutions? Yeah, I mean, I think it's about as bad a precedent as you can get. I don't think that this administration is going to maliciously use this precedent. I mean, first of all, this is not binding precedent, this guilty plea. It's sort of very informal precedent. But let's say we get a future United States president that is hostile to Bitcoin, someone like Elizabeth Warren, who wants to ban Bitcoin. Elizabeth Warren is sort of the biggest antagonist to Bitcoin in the United States government. She tried to pass a bill which essentially bans Bitcoin by doing the same thing that this court case did. It's called the Digital Asset Anti-Money Laundering Act, or DAMLA. I think she introduced it in 2022. And what this law does is it doesn't say on its face that it bans Bitcoin, but it treats everyone in the ecosystem, node runners, miners, lightning routing nodes, you name it, as money transmitters, knowing full well that they can't comply with money transmission laws. It's just not possible, right? Because these are peer-to-peer technologies. This is just software. This is not a business. And that was sort of her grand plan to ban Bitcoin. Thankfully, that bill didn't go anywhere, but you really could, with a Department of Justice that works for a president that is more hostile to the Bitcoin ecosystem than the current Trump administration is, you could see this precedent being weaponized against people in the Bitcoin space. And that really is a concern.
Is that also, as far as I know, the app was completely open source. So is that also kind of an attack on just open source in general?
Sure. I mean, I really think the precedent is, specific precedent that we worry about here is more about non-custodial technology, whether or not it's open source. The Bank Secrecy Act says that you are a money transmitter if you accept and then transmit funds on behalf of the public. The plain reading of that language is between accepting funds and transmitting them, you have to have the funds. You have to have custody or control of the funds, or else you're not accepting or transmitting. If we twist that language into a bizarre way to say that you can be a money transmitter and accept and transmit funds without having custody of those funds, that's, leads to these illogical places. And then if you think about sort of from a high level, the history here, right? Bitcoin was not the first attempt at peer-to-peer eCash. There was DigiCash, Eagle, Liberty Reserve, the sort of cypherpunk movement that came out of the 70s and culminated in the creation of Bitcoin in 2008. Really had this goal of true peer-to-peer electronic cash, that only worked when Satoshi invented sort of proof of work that solved the Byzantine generals problem and secured by public-private key cryptography. And the reason that's so important is that by having the proof of work consensus mechanism, you can send funds on a peer-to-peer basis without a centralized clearinghouse like some of these other earlier attempts had. If you look at the history of things like eGold or Liberty Reserve, they worked for a while until the government just arrested the people who were the administrators, right? The people who maintain the ledger. And Bitcoin didn't have that fate because there is no company, there is no central authority that maintains the ledger. The ledger is a peer-to-peer ledger. And sort of the meta problem that we're facing with these cases is that our illicit finance laws, including the Bank Secrecy Act is the biggest one of them, were written at a time when if you had an electronic transfer of money, necessarily there was a regulated financial intermediary in the middle of that transaction. If I Venmo you money, it feels like the money is going right from my phone to yours, but that's not what's happening. It's my bank talking to your bank. And if we don't have the same bank, there are multiple correspondent banks in between. And even though it seems like it's settling instantly on the Venmo ledger, the actual money is settling on the sort of SWIFT or FedNow system in a couple weeks, right? These are long, complicated transactions, and each of the intermediaries in that transaction are federally regulated banks that are subject to the Bank Secrecy Act. That's not how Bitcoin transactions work. If I give you Bitcoin, there's not a bank, there's not a regulated entity in the middle. It really is more like I hand you a paper bill, right? It is just the money going from me to you with nothing in between. And the sort of laws we have aren't set up for that possibility. And so we're at a point where we either need to modernize our laws to recognize the just technological fact that Bitcoin and blockchain exists and electronic peer-to-peer transactions are possible and happen all the time, every day, or we can try and shoehorn the old laws that don't fit into the new technology, and you get this result of we're going to throw software developers in prison for essentially publishing code.
It's super interesting, all those developments, because like we hear a lot of positive news for Bitcoin, especially from the Trump administration. But then this seems to be something that is not too much in the news. Like not a lot of people actually talk about that, and it's something that can have really bad implications in the future. What is kind of like your look in general at the Trump administration? I think we have now, I don't know, 7 months of where he worked in the administration, and the different acts that come out of that, the different policies that might change. I mean, 7 months is not too long, but there are some things that are moving already.
Yeah, well, look, there's undoubtedly been a dramatic shift over these 7 months. So this issue of money transmission and the Bank Secrecy Act is an area where I do have frustration with the current administration. I think they should be doing more here. They put out a memo a couple months back called the Blanche Memo from the Deputy Attorney General, Todd Blanche, saying that they were not going to go after software developers for the way that people used their software. And yet they let the Samurai Wallet and Tornado Cash cases go forward, which I think was a grave error. But in general, it is a night and day difference between what we had in the Biden administration in all sorts of ways. So I would say basically the whole regulatory state under the Biden administration was hostile to Bitcoin in a whole lot of different ways, Bitcoin and the broader sort of digital asset or crypto ecosystem. The reason for this, largely speaking, is what seems to have been a political deal between Biden and Elizabeth Warren when she dropped out of the race in 2020. It seems like she was given a lot of staffing authority in the Biden administration. She got to pick who ran various agencies. So she was the one who was responsible for Gary Gensler being at the SEC and sort of targeting Bitcoin and crypto companies. If you look at the tail end of the Biden administration, when we finally got spot Bitcoin ETFs approved, not because the SEC decided to allow them, but because the SEC was sued by Grayscale and a federal court forced them to approve the Bitcoin ETFs. There's this just like incredibly salty opinion from Gary Gensler about how Bitcoin's not safe. And, at the one hand, he says we are asset neutral. We're not taking a position about what's good or what's bad. And then he just goes to like shit on Bitcoin repeatedly and gratuitously. There's similar sort of lawfare against the rest of the crypto space with lawsuits by the SEC against Coinbase, against Binance, against, almost everyone there. There was Operation Choke Point 2.0, which is from another branch of the Biden administration, the FDIC, which put pressure on banks not to accept just dollar deposits from Bitcoin and crypto startups. This is something a lot of my clients, and to some extent, I directly saw. I have Bitcoin on my website because I serve Bitcoin clients, but I'm not a crypto company. I'm not issuing a token. I'm just a regular old law firm that helps Bitcoin companies comply with the law. And it was really difficult for me to get a escrow account with a large bank because they didn't, just the risk of doing business with anyone associated with Bitcoin or crypto in the Biden administration was seen as really high. Then you had the DOJ that brought these prosecutions against open source developers. And so the biggest shift with the current administration is the end of this, I think, really misguided war on crypto. And I got to give a lot of credit for that to people like David Bailey that saw early on that this was a political opportunity to win hearts and minds. And then companies like Coinbase that poured a ton of money, something like $140 million into the Fair Shake PAC, which both acted in the presidential election and then on both sides of the aisle in Congress, supporting both Democrats and Republicans that were pledging to be pro-crypto as opposed to anti-crypto. So the biggest shift we've seen is just the end of the hostility that we saw from the previous administration. I would say the other big thing that we're seeing, a real shift, is that the administration is taking Bitcoin and crypto very seriously. Now, sometimes there are what looks like conflicts of interest. The president and his family are obviously personally involved in various Bitcoin and crypto ventures. They've got a DeFi project called World Liberty Financial. They have interest in a Bitcoin treasury company, in a Bitcoin mining company. They own a lot of Bitcoin and crypto. But they've also put people in power across the federal bureaucracy who understand this industry, who are trying to get it right. And then, I can say, sort of wearing my BPI hat, the types of conversations that we are having with both the administration and with congressmen and senators are just so much more substantive and detailed than they ever were. We've seen in the past that there were some lawmakers who sort of wanted to be directionally pro Bitcoin, pro crypto, but they didn't really understand it. They just kind of wanted to cheerlead from the side. And now we're having like real conversations about policies around Bitcoin mining, around software development, around, what should states or the federal government hold Bitcoin on their balance sheet as a hedge against monetary debasement and to, be a bolster for dollar strength long term. How can Bitcoin mining stabilize power grids? Like these are interesting, detailed conversations that the administration is taking really seriously. That sort of culminated in the other thing that happened yesterday, which is the publication of a 168-page crypto report, which is a really interesting, comprehensive document laying out the administration's recommendations for Bitcoin and crypto policy, including on the final page the funding of a strategic Bitcoin reserve, where there's my favorite part of the report, which is a footnote describing the administration's plan to accumulate more Bitcoin for the federal government as stacking sats, and defining in this document from the White House what stacking sats means.
I love that. I did not know that. That's interesting. Why does it matter that the governments and the states are accumulating Bitcoin? I love that they are calling it stacking sats.
Yeah, so I think that's an interesting question. I think if you were to zoom out and look at what geopolitical moment we're in right now, we are exiting a world of U.S. political and military hegemony, and also monetary hegemony. In 2022, when Russia invaded Ukraine, we took sort of the unprecedented step of seizing or freezing Russia's U.S. T-bill reserves. I think that sort of signaled the end of American treasuries as the neutral reserve asset. And since then, you can see central banks around the world accumulating gold at a huge rate, which is part of why the price of gold has gone up so much. At the same time, you see in China, they're rolling out their central bank digital currency, the CBDC, the yuan, that they want to use as a lever of power around the world and do trade in Africa and the Middle East in this sort of digital currency that they control. And all of these things sort of threaten to undermine the dollar as the world reserve currency to some extent, and undermine the treasury as the sort of neutral reserve asset that central banks around the world hold. At the same time, I think this is a bipartisan thing. We are spending increasing deficit amounts every year. Every opportunity we get, we spend more and more, pile on more and more debt. In the last year, I think that for the first time, the interest on our debt surpassed our military budget, which is really astonishing when you stop and think about it. There are about $6 trillion worth of unencumbered sort of like base dollars in the world, and there's over $120 trillion of dollar-denominated debt, which means that that the $6 trillion kind of have to zip around the world to satisfy like a 20 to 50x debt load, right? We're super heavily levered on our money. And so when that comes due, the next time we have a fiscal crunch, we can either have a giant Great Depression where everyone, including governments, default on their debt, or we can do what we always do, which is just make more dollars. We can print more money.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.